the agri-facing sector, because we have seen Skymet predict a normal monsoon, and we actually want to understand what the implications are for a lot of these agrochemicals as well as perhaps fertilizer companies. So for that, we're in conversation with Rohan Gupta. He's the Associate Director for Institutional Equities at Edelweiss. Good morning, Rohan. Thanks for joining us. Rohan, let me just start off with the fact that we have had Skymet make the prediction of normal monsoons. And I reckon that normal monsoons is, of course, positive news for the agricultural industry. My question really was right now is what is the capacity of the farmers, in terms of how acreage has panned out and the kind of income that they have had right now to go ahead and buy fertilizers and crop protection?
Good morning, Agam. Yeah, as you rightly said, that Skymet has given it's a positive commentary about the monsoon, but that is a general trend that most of these monsoon forecasting agencies, including IMD and Skymet, they generally come with a positive commentary at the starting of the monsoon. But what we need to see that how the distribution of monsoon pans out when the season evolves. So we need to really see that, number one. Second, as you rightly said, that when farmers enter in the sowing season, like Kharif crop has just to start, the cash position of the farmers really matters a lot, but also matters that their predictability of the farm produce prices or the crop prices, what they are going to get of the produce prices. And on that front, I believe that this year is likely to be better than the last year. Some of the crops like cotton and paddy, we are going to see better prices than what we have seen in last year. Also in some of the horticulture crops, which has been affected last year by either demand or a pre-GST scenario, there we are going to see better prices across the crop. So in terms of pricing outlook, I see that it is much better than the last year. This year has not been that great from the farmer's perspective, and Rabi crop has also not been something very, very encouraging for the farmers. But I believe that the higher produce prices will be something which will be giving incentive to the farmers to spend on agri input, and that's where our positive commentary is about agri input companies and for the season going ahead.
Okay. Rohan, I understand that you're saying that the prospects for some of these agrochemical companies look good as far as FY19 is concerned, but could the uptick in the global raw material prices really dampen the margin outlook at least and the bottom line prospects for some of these companies?
Sure, Shraddha, you're right. In terms of that agri input prices, especially some chemical prices, we have seen that China has seen some chemical prices going up, and the impact of that has also to be seen in agri input prices as well. But if the demand scenario is good, then these companies will be in position to pass on the prices. And we have seen, especially in a generic product category, we have seen that prices have already started going up from 5% to 20%, depending on the product category. But with the pickup in demand, we should be able to see that companies will be in position to pass on the prices and holding on their margins.
Right, Rohan. So I believe that you do like something like Dhanuka Agritech from the crop protection industry and Deepak Fertilizers in the fertilizer space. Can you take us through the reasons behind your preference towards these stocks?
Sure. So we have seen a significant correction in the stock price of Dhanuka Agritech in a recent weakness, and the company's performance has also not been that great in last couple of quarters, and that is also coming from the overall weakness in agrochemical industry. We see that coming quarter, I mean Q4 and more importantly first half of next year, we should be able to see the benefit in terms of their pickup in a revenue growth for our company. We expect company to easily clock a revenue growth of almost 12 to 15% revenue growth. If we are expecting a normal monsoon, it can be even higher. And with the company holding on our margins, we should be able to see a 20% plus PAT growth for a company like Dhanuka. And I believe that the new product launches, the new product which they have launched last year, which could not have done so well for the company because of the weak monsoon scenario, should be able to help the company in this year, and that's what our optimism in the company is driven from there. Deepak Fertilizer company has last year commissioned or increased their capacity of complex fertilizers last year significantly, and this year we are going to see a significant volume ramp up for the company that will be driving company's fertilizer earnings. On chemicals, Deepak Fertilizer also have a wide portfolio of chemical, and more than 60% of its profitability is going to be driven by its chemical portfolio. There we see that pickup in ammonium nitrate business and other chemicals is going to drive the earnings growth for the company. So that's why we are pretty positive on Deepak Fertilizer for the current year.
All right, thank you very much for giving us your perspective and the outlook as far as agri inputs are concerned, Rohan. That was the view coming in from Rohan Gupta of Edelweiss.